Hi, this is Am here with the Bulletin Board Heroes here at Vox Markets for Thursday, the 23rd of February. Starting off with the FTSE 100, where we are back at what was the initial January resistance from last month, around 78.80, which is good. If we can get away with that as the low after the fall back from 8,000 plus, that would be great. But otherwise, we've got 78.50 or so, which is the support line there from October, and then back to 77.20 as a worst case scenario at the moment, Putin permitting, etc. Otherwise, on the upside, back above I suppose the 79.30 area, we'd be looking at an attempt on 81.50 or so, which is that September resistance line projection. But at the moment, probably still just looking for the FTSE to stabilise after a rally which came up from 6,700. Obviously, nobody said buy at that time. On to the DAX, and here we've got a situation with the consolidation at 15,200 has worked well. That was the initial gap up that we had at the beginning of the month, and also the markets bounced just above that support line there from October, so actually looking in a way better than the FTSE now. We've still got that weird line of resistance from back in September, which blocked progress around 15,600 through 15,600 through that line, looking for 16,000 or maybe 16,500 rather over the following month or so. But nice consolidation there, nice sideways consolidation, and also a consolidation above old resistance, which is just what you want to see in these bullish situations. Moving on to the Dow, which, so I've said before, has been a bit of the, going the opposite way to the other indices we look at. We broke back below the 50-day moving average after finding support for an extended time on it, which was a bit of a trick, let's say. The fear that this market could go down to 33,000 has been proved to be real. And in fact, we've got one potential new leg down to the 200-day moving average around 32,300 still to come, by which time hopefully this market will become oversold and the the sell-off will reverse. But very strange that the Dow is doing different things to the European markets that we look at. On to Bitcoin, where we're hoping that the consolidation here of the recent past will lead to the upside. So far, we had that dip towards the 50-day line, which is rising, which has been reversed, which is good. So ideally now we find extended support around 24,000, which is also, I suppose, the old trading area of August. And then above that, looking for 30 or 31,000 at the top of that broadening June triangle. That really would be the big prize for the bulls, and in a way suggests that the worst of their post-June nightmare was finally over. RSI above 50, which is good, and an uptrend line there in the RSI window to help this market along. It does look like an inverted head and shoulders of a type, a sort of extended head there and extended shoulders, but the main thing here is really holding 24,000 as long as possible. If you break back below that, it's 21,000, worst case scenario, 20,000 at the 200-day moving average. Onto the stocks, and one that shorters love talking about, obviously as a potential ongoing short, is Audioboom, but we had a nice hammer candle yesterday, classic one, and also had the low above the now rising 50-day moving average, so that's good. That suggests that really we've had a little bear trap below 470, that's sort of the initial support of February there, and above that a retest of £6 could be on its way. Best case at the moment, 750 by the end of next month, if there are no hiccups from now. And obviously we would need to stay above the 50-day moving average. Good also to see the RSI bounced above the neutral 50 level, so that is an extra positive signal for those who have got rather faint-hearted with the Audioboom situation over the last year or so. On to Cordel, where if you look in fine detail, you'll see there's been a bear trap gap reversal, unfilled gap to the upside last month. Another gap higher today and a trendline break from August. So even though this doesn't look like the most liquid stock on the London Stock Exchange, we can say that above 6p and the 50-day line, we're looking for 12p on Cordel over the next 4 to 6 weeks, or perhaps even sooner. Next situation is one which has had the Twitterati looking for good news, and they got it today, although I have to say I'm not quite sure. I haven't heard of the companies that it's doing a deal with, but obviously I'm not a specialist in that area. Here we've had a bounce off the 50-day moving average at 0.12, been looking for up to 0.18, the 200-day moving average, but really enough should have been done now to get the shares up towards 0.2 or 0.25 by the end of next month. It'd be disappointing now that they're above the 50-day moving average, and with that news and with that bear trap and bullish divergence last month, the shares can't finally get on their way up. Another stock which has been hit hard over its short lifespan on the stock market is Genflow. Here it's just the first signs that we're bottoming out. So another test of the area under 2 pence, slightly higher low there for February versus back in November. Bullish divergence, or at least an uptrend line there, and a trend line break from back in December around the 2.2 pence level. Above that, we're looking for the 200-day moving average of 2.8, and the big price, obviously, that resistance line projection from August last year as high as 4 pence. But I think at the moment, most followers of the stock will be happy just for 2 3/4 over the near term. Stock which I'd never heard of before is back again, which is great. We've got Genincode. Here, a break of that resistance there around the 21.5 pence level. Above that, we're looking for an easy move up to 30 pence, and then perhaps or presumably new highs on that. But the highs above 40 pence. But nice sharp reversal there, unfilled gap to the upside from the low as well. So that shows that the bears were caught out, and that is still operational in terms of the turnaround there. So looking very good above 21.5 pence. Always good to see when the charting works, which luckily is not quite as rare as it might feel or seem. Here we've got Marula, and just hit that line really, which is wonderful. That top of that September price channel. We were looking for a 10 pence target, and only 0.35 pence away from that now, or actually exactly 0.35 pence away from that on a mid-close basis. What's going to be interesting now is what happens when we get to 10 pence, where there's a steeper line of ascent, and that could be in the form of a move like this, which now would pencil in 14 pence or 15 pence by the end of next month. I think we were looking for 10 pence by the end of next month before, but looks like we'll have that rather sooner. So above 10, looking for 14, and the bull argument very much in place while we're above the old January resistance around the 7 3/4 pence levels. Stock which is requested is Mercantile Ports, and I have to say it's a brave soul that would look at this now, but we have had gaps to the downside and a unfilled gap to the upside, so there's a possibility of a turnaround. Probably safer to say let's wait for the 50-day moving average to be recovered. That's around 7.5 pence. So above 7.5 pence, then one can start looking for a return to double figures, i.e. 10 to 12 pence over the near term. But still early days there, but just the first signs of a turnaround. Physiomics is next, and here you can see that we bounced off what was an old target for the stock, target line, and that is around the 3.8 pence level. Above that, looking for 6 pence, a retest of the resistance from last month. Quadrise Fuels is the next contender here. We've seen a range really between 1.2 and 2.8 pence. Got a trendline break there around the 1.3 pence level, and also a gap close buy signal, so double gaps down, but then we'll hope to close above both of those gaps today. And so therefore above 1.3, looking for initially up to 2 pence by the end of next month. Yesterday's star performer, no pun intended, was Star Phoenix Group, and interesting that we managed to retrace back to the 200-day line at 1.2 pence after the bulletin board heroes yesterday, and now we're back above the resistance line target around 2 pence that we had before. I said yesterday above 2, we're looking for 2.8, and that is hopefully what we'll get over the next few days. Synergia is next, and had a bit of a flurry at the beginning of the month. Now it's good to see as much time as possible spent by the shares above the 200-day moving average at 0.13. Above that, we're looking for 0.19. If you're cautious, obviously wait for a break of recent highs, but above 0.13, looking for 0.19, and that September resistance line projection. One of the stars of the show of the recent past has been TAP Global. Got off to a good start and has not really looked back, so that was the early part of last month. Current situation is we've got support really ideally in the 5.5 area. Above that, looking for 7.5, and a early 2022 resistance line. Obviously, that was in the old Quetzal days, but the chart seems to be following through. So above 5.5, looking for 7.5 on tap by the end of next month. Just a couple of situations to go. First one is Fast Resources, where had a rebound off the 200-day moving average, so that was around 0.54, and above that we're looking for a retest of the 1 pence area, maybe up to 1.2 this time. We obviously missed that target on the last flurry that the shares have had, but just breaking neckline resistance around the 0.69 pence level. Just watch out for that. If we can get a few end of day closes above that, then we could be back to the 1 pence zone quite quickly. Finishing off with Woodbois, where it's been mentioned that the seller may be out. Looking at the way that the chart's been going, it looks like everyone's out actually, but we've had bullish divergence on the recent fall, so January, February, so going to new lows, but RSI trading highest, which is a good sign because that is based on intraday price action and something you can't really tell unless you are a mathematician, I suppose. Looking for a break of that resistance line there at 1.6 pence. Ideally, the 50-day moving average 1.62 would be the trigger for a move up to 1.9 pence. Initially, I would like to see no fresh lows, obviously, in the meantime, even though the uptrend line and the RSI window is there. So above 1.6 or so, looking for 1.9 on Woodbois. That's it for me today. More updates tomorrow.